Hello guys, welcome to another trade breakdown video. Today I'll be breaking down the trade that I've taken on Friday 17th of January 2025. As you can see, I have already entered the January mark now, and my back testing is about to finish, which is a very good sign so that I can focus on the front testing. Even today I got a beautiful buy right here. Could have got potential buys right here. It would have been a beautiful win if I have taken this trade, but it is what it is. I have not taken it, so let me quickly show you the news. On this week was a very high impact driven news. As you can see, whole week there was news. On Friday there was GBP news, so it was tricky. It would be tricky to trade New York session, so now we will look for a trade on London session. So DXY, the bias is clearly bearish according to how this Thursday candle closed, and on GBP USD the bias is clearly bullish according to how this candle closed, which is not aligning with the weekly bias. My weekly bias was clearly bearish, but the whole week the market has been going up, and we also know that even if my weekly bias is bearish, the Monday, Tuesday, Wednesday, Thursday goes up, then we will look for buys until unless it shows me that it wants to go down, because we trade with the bias, with the daily bias. We don't trade with the weekly bias, meaning whenever the daily bias is aligning with the weekly bias, that's very good sign for us. But obviously I don't only rely on the weekly bias, because I know that the daily bias is also very important, and it works perfect. So now going on Friday, I was looking for buys, and if I'm looking for buys, I would look for some sort of supply demand zones and some sort of change of characters to the upside. But on the 4 hourly there was something else. On the 4 hourly the market was ranging, or you can argue the market was making a lower highs, lower lows, and it was literally in a bearish solidified range here from this high to this low. The price was ranging in this bearish solidified range, and it was ranging. The price was not trending, but it was ranging. We don't want to be a part of this market condition, but obviously I'm backtesting, so yeah. And even in the live markets I would look for trades. I will, just because the condition is bad doesn't mean that we will not look for anything. We will learn. Obviously we will lower the risk and we will only trade less, but we will look for trades. That's not a problem. So at first I was looking for a buy from this demand zone. As you can see right here, it was a H1 demand. This demand zone was valid because of this market structure shift, fair value gap, and it was with the bias being bullish, which was not respected at all. As you can see, this demand zone was not respected at all, right? So this H1 demand zone was invalid. The previous day low liquidity was swept, and my bias is bullish, right? So I am looking for buys. London session literally went to the downside, and then after London session the market again went down, but we don't care about that. This timing we don't trade. We only trade the timing that I've marked, as you can see here, and the New York session. So this trade was a London continuation model. London made a beautiful demand zone right here, and this demand zone was valid due to this H1 market structure shift right here. Not on the H1, sorry, on the M30 I believe. Yes, on the M30 it was lower high, lower low, higher high, body close above this point right here. Like, not one of the cleanest, but I anticipated after seeing this M30 rejection from this demand zone. Clearly the price showed me that it wants to reject this demand zone, and when I've seen that it is rejecting this demand zone, that is when I went to the lower time frames like the M5 and then took my entry. It was a beautiful trade, M5 equilibrium level entry with a 12 pip stop loss, because the Asian range is very big. As you know, on January, February, March, literally the price action was very volatile due to Trump tariffs and stuffs, right? So this trade was a banger. As you can see, beautiful bullish break of structure to the upside, and 1:4 risk to reward clicked. And yeah, this was the trade. The higher time frame buy, the point of interest inducement was not there, but everything else we want to see in a trade was here. Even the DXY correlation, I've also journaled this trade, so you can see what I have learned and what were the confluences to take the trade. So trades like this works too, and don't hesitate whenever you get a trade like this in a market condition like this. Okay, trade with the higher time frame bias, and this was literally a valid trade because this demand zone was made in London session, and we know that when our higher time frame bias is bullish, we can also look for a trade London continuation New York model, right? New York continues with the London model. That is one of the New York models that we trade, and I've also written it. It was either the mitigation, or even if it was the manipulation, we would have taken trade. Mitigation, manipulation, right? So both are correct and both work to the T. So yeah, this was the trade on Friday.